Now speaking, Wendell Huang, Vice President and Chief Financial Officer. Good afternoon, everyone. Thank you for joining us today. Our second quarter financial results were impacted by the overall global economic conditions, which dampened the end market demand and led to customers' ongoing inventory adjustment. Despite the industry's cyclical downturn, we continue to invest in R&D to support our N3 and N2 development. Our second quarter revenue decreased 5.5% sequentially in NT or 6.2% in US dollars. Gross margin decreased 2.2 percentage points sequentially to 54.1%, mainly reflecting lower capacity utilization and higher electricity cost, partially offset by more stringent cost control and a more favorable foreign exchange rate. Operating margin was 42%, down 3.5 percentage points sequentially. 5-nanometer process technology contributed 30% of our wafer revenue in the second quarter, while 7-nanometer accounted for 23%. Advanced technologies, defined as 7-nanometer and below, accounted for 53% of wafer revenue. HPC decreased 5% quarter-over-quarter to account for 44% of our second quarter revenue. Smartphone decreased 9% to account for 33%. IoT decreased 11% to account for 8%. Automotive increased 3% to account for 8%, and DCE increased 25% to account for 3%. We ended the second quarter with cash and marketable securities of 1.5 trillion Taiwan dollars or $48 billion US dollars. We generated about 167 billion Taiwan dollars in cash from operations, spent 251 billion Taiwan dollars in Capex, distributed 71 billion Taiwan dollars for third quarter 2022 cash dividend and raised 41 billion Taiwan dollars from corporate bond issuances. Our third quarter revenue is expected to be between $16.7 billion US dollars and $17.5 billion US dollars, which represents a 9.1% sequential increase at the midpoint. Gross margin is expected to be between 51.5% and 53.5%, operating margin to be between 38% and 40%. We expect our 2023 capital budget to be toward the lower end of our range of between $32 billion US dollars and $36 billion US dollars. Our depreciation expense is now expected to increase by mid-20s% year-over-year in 2023, mainly as we ramp our 3-nanometer technologies. We have just approved a distribution of 3 Taiwan dollars per share cash dividend for the first quarter of 2023, up from 2 Taiwan dollars and 75 cents previously. This will become the new minimum quarterly dividend level going forward. For 2023, TSMC shareholders will receive a total of 11 Taiwan dollars and 25 cents per share dividend and at least 12 Taiwan dollars per share cash dividend for 2024. We will continue to work closely with our customers to plan our long-term capacity and invest in leading-edge specialty and advanced packaging technologies to support their growth while delivering profitable growth to our shareholders. Now speaking, C.C. Wei, Chief Executive Officer. Thank you for the opportunity to present our quarterly earnings call. We concluded our second quarter with revenue of $15.7 billion US dollars, in line with our guidance in US dollar terms. Despite the overall global economic conditions, we expect our business in the third quarter to be supported by the strong ramp of our 3-nanometer technologies, partially offset by customers' continued inventory adjustment. We now expect the foundry industry to decline mid-teens and our full year 2023 revenue to decline around 10% in US dollar term. We maintain our forecast for the 2023 semiconductor market, excluding memory, to decline mid-single-digit year-over-year. We also forecast the fabless semiconductor inventory to exit 4Q23 at a healthier and lower level as compared to our expectation 3 months ago. We have said before, the massive structural increase in demand for computation underpinned by the industry megatrend of 5G and HPC continues to drive greater need for performance and energy-efficient computing, which require use of leading-edge technologies. These megatrends are expected to fill TSMC's long-term growth. We remain well on track to grow between 15% and 20% CAGR over the next several years in US dollar terms. We are seeing robust demand for our 3-nanometer technology and expect a strong ramp of N in the second half of this year, supported by both HPC and smartphone applications. We are targeting our 2-nanometer technology to be available in the second half of 2025 to customers with production in 2026. This technology will be the most advanced semiconductor technology in the industry in both density and energy efficiency. Now speaking, Mark Liu, Chairman. Today, I want to talk about TSMC's global manufacturing footprint status update. TSMC's mission is to be the trusted technology and capacity provider of the global logic IC industry for years to come. Our strategy is to expand our global manufacturing footprint to increase customer trust and to expand our future growth potential and to reach for more global talents. In Arizona, we are building a first fab to provide U.S. most advanced semiconductor technology in mass production to support the needs for U.S. semiconductor infrastructure. Our fab in Arizona started construction in April 2021 with an aggressive schedule. However, we are encountering certain challenges as there is an insufficient amount of skilled workers with those specialized expertise required for equipment installation in a semiconductor-grade facility. We expect the production schedule of N4 process technology to be pushed out to 2025. In Japan, we are building a specialty technology factory, which will utilize 12, 16 and 22, 28 process technologies. Volume production is on track for late 2024. In Europe, we are engaging with customers and partners to evaluate building a specialty fab in Germany, focusing on automotive-specific technologies based on the demand from our customers and the level of government support. In China, we are expanding 28-nanometer in Nanjing as we plan to support our customers in China, and we continue to follow all rules and regulations fully. At the same time, we continue to invest in Taiwan and to expand our capacity to support our customers' growth. TSMC is expanding its global manufacturing footprint to increase customer trust and to expand its future growth potential. In April 2021, construction began on a first fab in Arizona to provide U.S. most advanced semiconductor technology in mass production. However, there is an insufficient amount of skilled workers with those specialized expertise required for equipment installation in a semiconductor-grade facility, pushing the production schedule of N4 process technology to 2025. In Japan, a specialty technology factory is being built, which will utilize 12, 16 and 22, 28 process technologies, with volume production on track for late 2024. In Europe, TSMC is engaging with customers and partners to evaluate building a specialty fab in Germany, focusing on automotive-specific technologies. In China, TSMC is expanding 28-nanometer in Nanjing and continuing to invest in Taiwan and to expand its capacity to support its customers' growth. TSMC is working with governments to secure further support and leverage its competitive advantage of manufacturing technology leadership, large volume, and economies of scale to continuously drive its costs down. TSMC is confident that its long-term gross margin of 53% and higher and sustainable ROE of greater than 25% is achievable, and it will continue to maximize the value for its shareholders. J.P. Morgan Chase & Company analyst Gokul Hariharan inquired, could you provide some insights into what TSMC is doing to address the capacity shortage for AI accelerators, such as GPUs and ASICs? Specifically, what actions are being taken in terms of advanced packaging and logic capacity? Additionally, when do you anticipate a return to a healthier, more balanced demand-supply level for these AI accelerators? Is it expected to happen sometime next year or potentially sooner based on customer demand and capacity plans? C.C. Wei replied, AI demand is strong. We have no problem supporting the front end, but the back-end advanced packaging side, specifically CoWoS, has tight capacity. We're working with customers to meet their needs in the short term, but increasing capacity as quickly as possible. We expect the tightness to ease by the end of next year. In the meantime, we're working closely with customers to support their growth. J.P. Morgan Chase & Company analyst Gokul Hariharan inquired, could you provide an update on the capacity expansion of CoWoS? C.C. Wei replied, I can tell you that we anticipate roughly doubling our capacity. Goldman Sachs analyst Bruce Lu inquired, what are the key assumptions for the global semiconductor industry's growth in the coming years? Mark Liu replied, yes, you answered my question. To summarize, while your rationale is correct, some of the factors may not be totally included. Specifically, the customer's gross margin may not represent the average customer's gross margin, and the market share factor is assumed to be constant. Additionally, the semiconductor growth is currently forecasted to be between 4 to 5%, and the longer-term semiconductor growth excluding memory is yet to be evaluated. Goldman Sachs analyst Bruce Lu inquired, what investments have been made to increase market share and growth in the advanced node? Mark Liu replied, the market share value is a combination of our technology leadership and differentiation, as well as the underlying structural megatrends. Our CAGR is reflective of both of these factors. I cannot provide a numerical comparison at this time. Goldman Sachs analyst Bruce Lu inquired, what caused the 5% revenue shortfall in the full-year guidance, resulting in a 10% decline? C.C. Wei replied, yes, we did see something different than what we anticipated. 3 months ago, we were more optimistic, but now our outlook is weaker. China's economic recovery has been slower than expected, resulting in weaker end market demand. Even with strong demand for our AI processors, it's not enough to offset the macroeconomic impacts. We now expect the year to end with a 10% decline. This is due to a combination of macroeconomic factors. J.P. Morgan Chase & Company analyst Gokul Hariharan inquired, when do you expect the inventory correction cycle to bottom out and what factors are you looking at to determine the strength of the recovery in 2024? C.C. Wei replied, the macroeconomy has weakened, leading to higher inflation and interest rates that have impacted demand in all market segments and regions. This has caused our customers to be more cautious in their inventory control in the second half of the year. We expect the fabless semiconductor industry to have healthier inventory levels, but they will continue to manage their inventory in 2021, depending on the macro situation. J.P. Morgan Chase & Company analyst Gokul Hariharan inquired, "Is it fair to say that the early part of next year will be similar to the current situation?" C.C. Wei replied, "Gokul, we anticipate providing our comments in 2024. Morgan Stanley analyst Charlie Chan inquired, "Would TSMC consider adjusting wafer prices to absorb increased overseas fab costs, and could the increased capacity for advanced packaging lead to higher pricing?" Mark Liu replied, "Yes, the overseas fab will cost more in the short term due to an immature supply ecosystem. Labor costs are higher than anticipated. We are taking advantage of government subsidies and evaluating the price value of overseas geographical flexibility to increase customer trust and maximize shareholder value." C.C. Wei replied, "We are also working with our customers to make sure that the pricing is reasonable and competitive. I'm confident that we are doing our best to increase capacity and provide our customers with the supply assurance they need. We are working with them to ensure that pricing is reasonable and competitive. We are committed to providing our customers with the best value possible." Morgan Stanley analyst Charlie Chan inquired, "What is TSMC's assessment of the AI semi-demand and how does it compare to CPU server demand?" Mark Liu replied, "In terms of AI development, our model is based on the assumption that a certain percentage of data center processors will be AI processors. We believe that the trend of a large portion of data center processors being AI processors is a sure thing. In the short term, when the Capex of cloud service providers is fixed, this could potentially cannibalize data center processors. However, in the long term, when cloud services have generative AI service revenue, we expect Capex to increase, which should be consistent with the long-term AI processor demand. Additionally, we anticipate that ASICs will play an important role in AI development." C.C. Wei replied, "The customer demand for ASICs for AI applications is high and, as Mark mentioned, this short-term surge is likely to be sustained in the long term. It's important to note that these AI applications require leading-edge technologies and large die sizes, which is an area of strength for TSMC." Credit Suisse analyst Randy Abrams inquired, "Wendell, what is the expected impact of N3 on fourth quarter gross margin? Are there any positive offsets that could keep it more stable? What do you anticipate for gross margin in 2024? Wendell Huang replied, "We anticipate that the ramp of N3 will have a dilutive effect on our gross margin of 2 to 3% in Q3 and 3 to 4% in Q4 of this year, and 3 to 4% in 2021. We are working to reduce costs and maximize value to ensure a good return on the node." Credit Suisse analyst Randy Abrams inquired, "What is the primary factor driving the higher dilution in the first 2 years of ramp for the 3 versus 5 and 7? Wendell Huang replied, "The increasing process complexity does add to the challenges of a newer node, but our corporate averages have risen to 53% in higher gross margin, which is higher than before." Credit Suisse analyst Randy Abrams inquired, "How does the Arizona fab delay impact Capex for 2024? Wendell Huang replied, "Randy, the investments we've made in the past few years have been to capture future growth opportunities. We anticipate that our Capex will begin to level off in the coming years, resulting in a lower capital intensity." Credit Suisse analyst Randy Abrams inquired, "Do you still see potential for using 5-nanometer to optimize Capex? Does tool commonality play a role?" Wendell Huang replied, "Yes, we always build 2 connections between nodes to increase our flexibility. Last quarter, we discussed the strong multi-year demand from N3, which we are able to meet with the help of N5's tools. We won't comment on Capex beyond this year, but we will continue to invest in growth opportunities." Citi analyst Laura Chen inquired, "How does TSMC evaluate the expansion of backend capacity to align with the front-end wafer side? Is there a concern about potential overcapacity in the backend beyond next year, considering there is no problem in the front-end foundry space? Alternatively, is there a possibility of increased utilization rate in the advanced node at the foundry wafer side next year? And does the expansion of backend imply an expectation of increased utilization in the front-end wafer, particularly in the leading node? Conversely, is there a risk of overexpanding or overcapacity in the packaging side?" C.C. Wei replied, "AI is a hot topic right now and our customers are increasing their demand for front-end wafers. TSMC has the largest share of the market. We work closely with our customers to decide what backend capacity they need. We are planning our capacity to meet the strong demand, but it's still not enough. The concern is not overcapacity, but rather not having enough capacity to meet the demand." Citi analyst Laura Chen inquired, "What is the capacity expansion outlook for N3 and how does it compare to N5 and N7 in terms of gross margin?" Wendell Huang replied, "Yes, Laura. N3 is becoming more complex than previous nodes, but we are confident that we can continue to sell our value and reduce costs. We anticipate that N3 will be a long-term, profitable node for TSMC. We expect our gross margin to remain at 53% or higher." New Street Research analyst Rolf Bulk inquired, what drove the 15 to 20% Q-on-Q decline in 16 and 28-nanometer legacy nodes this quarter? What is the expectation for recovery in the second half of the year? C.C. Wei replied, yes, the mature nodes wafer are designed to be a companion to the smartphone, PC, and HPC markets. As the total unit of smartphones and PCs decline, the demand for leading-edge technology nodes also drops. This is why the mature nodes wafer is in demand. New Street Research analyst Rolf Bulk inquired, can you provide an overview of your Capex spending for leading-edge nodes, specialty nodes, and packaging for 2021 and 2023? Wendell Huang replied, our total Capex for the year is largely driven by leading-edge technology, accounting for 70 to 80%. We also invest in mature specialty technology, 10 to 20%, and advanced packaging, EBO, and other areas. UBS analyst Sunny Lin inquired, how should we expect the overall ramp-up of 3-nanometer compared to 5 and 7-nanometer? In the second year of mass production, 5-nanometer accounted for approximately 18% of revenue, and in the third year, it reached around 24% of revenue. However, there have been concerns about the cost of 3-nanometer for smartphone customers. Can the significant demand from high-performance computing, HPC, still drive a meaningful increase in revenue for 3-nanometer? In other words, can the ramp-up of 3-nanometer contribute to revenue in a similar way to 5 and 7-nanometer in the past? Wendell Huang replied, yes, N3 is a significant node for TSMC and will be a long-term, large contributor to our revenue. We have seen a substantial increase in our overall corporate revenue, so the percentage of N3's contribution is less important. CC has also noted that it is a multi-year, strong structural demand. UBS analyst Sunny Lin inquired, can N3 reach the corporate average gross margin over time? Wendell Huang replied, Sunny, it's becoming increasingly challenging for the leading nodes due to increased process complexity, especially for N3. We mentioned this at the beginning of last year, and it's likely that it will take 7 to 8 quarters to reach the corporate average, due to our higher corporate margin. UBS analyst Sunny Lin inquired, what implications does the transition to 2-nanometer have on cost versus performance? Is the target conservative or are there other technological challenges to consider? C.C. Wei replied, yes, Sunny, you are correct. We have seen a decrease in performance from Node 5 to Node 3, but the focus has shifted to power consumption reduction. We are working to ensure that our customers have greater power efficiency in their data centers and servers. Did I answer your question? Arete research analyst Brett Simpson inquired, CC, what is the customer reception of NEP and NEX compared to N3? Are customers migrating to the new variants, and when do you expect AI-related applications to adopt 3-nanometer family solutions? C.C. Wei replied, AI applications are already adopting our N3 technology node. We have a NEP and NEX, with the NEX providing the highest performance computing for CPUs. Our customers are widely accepting the NE and we are helping them transition to the NEP. There is a lot of customer engagement with all versions and variations of the N3 technology. Arete research analyst Brett Simpson inquired, can you provide clarity on the like-for-like wafer cost differences between operating in the US versus Taiwan? The TSMC founder previously mentioned a 50% premium to operate in the US. Is the cost gap expected to be that high? Additionally, when can we expect to receive the cash support from the US CHIPS Act to support TSMC? Mark Liu replied, yes, Brett, the founder is correct. We are currently using the supply chain and labor costs as they are. We are working with the US administration to receive subsidies and tax credits to cover the gap in the first 5 years. We are also working with our suppliers to set up more efficient supply sites to lower costs. The US administration is subsidizing our suppliers, which could further decrease costs. We anticipate this will help us maintain our forecasted corporate profitability. Susquehanna International Group analyst Mehdi Hosseini inquired, will 2023 gross margin be 53% or higher? Wendell Huang replied, Mehdi, we're not providing guidance beyond the third quarter. Our outlook for the second half of the year is that some negative factors may affect it. Our long-term growth margin target for TSMC is 53% or higher, which we believe is achievable. Do you have another question? Susquehanna International Group analyst Mehdi Hosseini inquired, what factors are impacting the 10 to 12% revenue increase in the second half versus the first half? How much of the new customer product launches are offset by inventory correction? C.C. Wei replied, Mehdi, your observation is spot on. The seasonality in the second half of the year is less pronounced than in previous years. However, we are ramping up N3 and launching a new product, so it's difficult to separate out the impact of each. I'm sorry I can't provide more detail. Needham & Company analyst Charles Shi inquired, what strategies is TSMC using to monetize the AI trend and capture greater value? C.C. Wei replied, Charles, I'm pleased to report that our customers are doing very well. This is great news for TSMC as we benefit when our customers succeed. We are proud to be able to provide a major portion of the market in terms of semiconductor components for AI. This has enabled us to capture a significant share of the market. Did I answer your question? Needham & Company analyst Charles Shi inquired, what proportion of the close to 50% compound annual growth rate, CAGR, for servers with AI processors is attributed to volume growth, and how much is due to pricing? C.C. Wei replied, we have a strong presence in the leading-edge technology node, and we anticipate a 50% CAGR. We are confident that TSMC will capture a significant portion of the semiconductor component market. Needham & Company analyst Charles Shi inquired, what is the expected level of capital spending in the next several years? Wendell Huang replied, Charles, our Capex has increased significantly over the past few years, from $10 billion to $36 billion last year. We are now beginning to reap the benefits of those investments, so the rate of increase in Capex will be slower going forward. Wendell Huang replied, thank you for joining us today. The replay of the call will be available within 30 minutes and the transcript will be available 24 hours from now, both of which can be found on our website at www.tsmc.com. We hope you have a good rest of the summer and we look forward to seeing you again next quarter. Goodbye.